All right, what's going on? This one here is going to be for my trade engineers. So if you're interested in developing your own strategies and putting the different pieces of your strategies together yourself, not just following someone else's strategy, this one is going to be for you. That's the way that I recommend anyway, by developing and putting together your own strategies, which is what I've done from the beginning. And now I can just make strategies whenever I need to, when the market shifts or in throughout different cycles of the market, I can adjust my strategy, or I can create a completely different strategy because I've already developed that skill, because that's the way that I started, right? So if that's you, keep sticking around. I got a strategy development tip here for you. So let's get it. All right, so a few streams ago, I mentioned cutting your losers early as like a risk management technique within your strategy. So I want to go a little bit deeper into it with this video here. I briefly mentioned it in the stream. So let's just go ahead and I'm going to do a deep dive in this video. I didn't really script this out. I took some notes, but I didn't script this out. So bear with me, but let's go ahead and let's talk about it. All right. So now in that stream, what I mentioned with cutting your losers early, I mentioned that you want to have a thesis, right? And on that note, I want to go ahead and mention that this is a theory of mine. I haven't fully tested it out the way that I would test something out, because this is not a method that I use within my strategy. So I want to make that clear right here from the beginning, that this is a theory. It's my theory. And so if you find this interesting, or if it's something that you want to try out, test it out for yourself, do your research, make sure that it works for you. And then if it makes sense to you and you're ready to apply it to your strategy, to what you're doing with your actual trading, then I would recommend that you start in paper mode first. And then once you develop the skills to be able to do it consistently, then you can start going with live money, right? But it's up to you. Do what you want to do, right? All right. So on that note, the first part of this with this thesis is you want to definitely focus on the stop loss. So that's what we're going to start. All right. So the reason that we're starting with a stop loss here, not necessarily dealing with the strategy, right now, what we're doing is I want to focus on the risk management side of it first. And then from there, we can use that as a starting point to develop our strategy, right? So what I mean is, I want to know per trade how much it makes sense for me to lose, so that by the time I get my winner, I still have enough capital to take that position and then be in the movement to take the profit, right? So I can pay for any losses that I took, right? Maybe not right away, but once we start going into this, it'll start to make more sense, right? So I can use this risk management approach starting here. That will help me determine, once I start looking at what I want to trade, that'll help me determine where I can enter, so that I can increase the chances of me not getting stopped out. Understanding, from the perspective of the stop loss and how much I can manage to risk per trade. And then I can start to look at where it makes sense for me to start setting up profit, right? And in my opinion, I think this works best with a fixed stop loss. And you can use a fixed profit target if you want, or you can go off the feel of the market and the structure of the market in that moment, right? So that's why I'm saying let's start with a stop loss. Okay, so let's just go do an example of this. Let's just go to the charts, and I'll go through this briefly. You want to do this in much more detail, but let's just go through it real quickly here. All right, so hypothetically, let's say I have an account to where the most that I'm comfortable with losing is $50 per trade, right? Now, understanding when I'm coming up with this number, understanding that I'm going to lose a lot, okay? And you want to keep that in mind, that with this kind of strategy, or with this kind of risk management technique, you're probably going to lose more than you win, right? So you're going to have a quote unquote poor loss to win ratio, right? So you're going to lose more than you're going to win, but you're going to make up for it, because you're going to have a better reward to risk ratio to make up for those losses, okay? So in this example, I have a $50 per trade loss that I'm most comfortable with, okay? So from that's going to tell me I'm going to be trading the micros, okay? And for this example, I'm going to use the micros in Q. I'm going to open that up a little bit. All right, so when I'm going through this, I'm going to back test, and I'm going to look at how I'm more comfortable to trade and where it makes sense for me to enter in, right? Keeping that risk in mind, okay? So let's say, for instance, I'm more comfortable with taking breakout trades, right? So I want to look for a point of consolidation, and then where I'm going to see a breakout to where I can take it, risking nothing more than $50, okay? So let's just say, for this, understanding how micro NQ futures work, let's say I'm going to risk 5 points, and 5 points with one micro NQ, that'd be $10. So from that, I could go with 5 micro contracts, or I could improve my chances better and get good at this first and start with 1 micro, and then start to scale up as I get more comfortable and I understand how this strategy works and if it really works for me, right? So let's just say we're gonna go there. Let's just say I'm gonna start with 1 micro contract, and I'm looking for if it makes sense for me to take a breakout with a 5-point stop loss, okay? So one way that you can do that, there's a lot of ways you can do it. Usually I like to use TradingView because of the tools. I can drag the tool around a little bit more easily. But for this, we're just going to use Sierra chart, okay? Because we can do the same thing. And what I want to do is I'm going to use this calculator here. And I'm going to use it to where it gives me 5 points. Right there, okay? And how do I know that is I'm looking up here in this PD. You can change this. I've adjusted this, but this is what mine shows. The PD is the point difference, okay? And so this shows me 5 points here. So I can look at this and see, all right, so with this 1 minute chart, or this is a 2 minute chart, does it make sense for me to take breakouts just looking at the print, right? So when everything is moving and things are, you know, the market is, you can see the price action in real time. A lot happened within this 2 minute period here. It didn't just start here and just go straight up. You know, it bounced its way up. Okay. So, but we just doing some surface level back testing right now to see if this will even something that we can even feasibly do. Right now on this day, this is a high volatility day, and I know that just by looking over here. But you know, let's just stick to this. There's kind of a little bit too much information. Let's just stick to this and see if we can even, if it makes sense just by the print. Okay, so I can look and see there's a breakout here. Maybe I want to account for the wicks, and maybe I can look and see there's a breakout there, right? And I want to see if price broke out from there and it kept going. That's all I'm looking for right now. I'm not trying to overthink this. I just want to keep it simple. So I'm going to take this and I'm going to move this drawing, and I'm just going to move it around. Let's say I took the breakout there. Did it keep going? Well, by the print, it did. It looks like it kept going. And from this, I could easily have a 3-to-1. Just giving this the quick eye test in hindsight. If it worked out, when it worked out, I could have got a 3-to-1 at least, okay? And then another breakout point here. What I want to do is I want to place that there. You can barely see it because the volatility is so crazy. Let me go ahead and open this up a little bit. All right, so the next place I want to look is, let me look at this one. We had a little bit of a somewhat kind of a consolidation. It was more of a pullback, sort of a flag pattern right there. And let's just say I took the breakout on this flag pattern right here. You can see the high is where the high of that calculator is where I would, you know, be entering in on the trade with my 5-point stop loss. Now there's a good chance that I would have got stopped out there. And so this is a good area to kind of show what I'm talking about. If I'm entering into a breakout from here, I'm looking for price to eventually either keep going up, right? Or it's going to turn around as a trap and go the other way below a previous pivot or a previous support, right? And so what we see right here is we had an entry, okay? And it went up a little bit, and maybe it gave you a 1-to-1 or 1.5, 1.5 to 1 maybe, right? And then it came back inside, but we never really broke back down. You know, we're looking for the overall picture of where price is going to go. We stayed in this relatively tight range here, and then eventually we ended up pushing higher. So if I want to see how efficient this will be for me, now I need to go into an actual back test this and kind of in real time. And I will use replay mode here to back test this and see if it works. Now, for back testing, what I like to do is I like to do manual back testing. I don't like to use back testing programs just because I've used them before and it was never perfect. And plus, these back testing programs, they don't typically, unless you pay for it, it may be a one that, you know, you got to pay a lot of money for. But most of these backtesting programs, they don't account for like high volatility events like economic events like FOMC and Fed news, or some random news coming out, or just some random pickup of volatility, you know, throughout the day. It doesn't really account for that, and so that gets mixed in there. And these are times where you could use a little bit more discretion and not actually execute on your strategy, because price action is a little bit more volatile than it normally is, right? So that's why I do my back test manually. So that's what I would do here. Okay, so let me go ahead and rescale this. All right, and I'm just running through this quickly again. Just want to go ahead and make that clear. You want to take much more time on this to make sure this is something that's going to work for you. All right, so there's two frame of thoughts here that just popped in my mind. I want to run through this really quickly. This is an abnormally high volatile day for even for NQ. So there's two frame of thoughts that you can use. One is that you would maybe skip this day, and this would be a day that you wouldn't use this strategy, because we did get all of these signs that this day was going to be a high volatility day, right? And that's another video for another day. But you know, you have that, or you could look at this as a good stress test, you know, day to test out and to see like, well, if you did get yourself into this, how would it have performed? So that way you kind of know, you have an idea of what your worst case scenario would be, right? So those are two frame of thoughts when you're going through this, okay? So I'm going to go ahead and set this up. Keeping in mind, I want a 5-point stop loss. Set this up here. And let's see. I'm going to add one. That's going to be my stop. So for my offset, my stop offset, that's going to be 20 ticks, right? That's going to be 20 ticks. And let's just say I want a 3-to-1, okay? So what we're going to do with that 20 is we're going to make that 60 for my target, okay? And now what I want to do is, I'm not even going to set a break even. You can get fancy with it, but I'm not going to do that, right? All right, so let me go and go back over here. Make sure I click on use attached orders so that we use everything that I set up right there. And you know, if I wanted to go in and save it and name it and all that stuff, I can do that there. But again, I'm not going to go into details with all of that. Now, the way that I would do a method like this is I would actually place a limit order, so that way I can make sure that I'm getting into this at the same price every single time, and I'm staying consistent that way. All right, so that comes into the second part of the thesis, to where you want to make sure that you're staying consistent to it until your thesis is proven wrong. This is my theory of how cutting your losses quickly works, right? And I'm not going to talk about that again. I'll try to find the live stream to where I was, you know, going in on that, and I'll link that in the description below. So I'm not going to, you know, reiterate why I'm going about this thesis that way, because I'm feeling like this video is already becoming too long. But in order for this to get the most benefit for cutting your losses quickly, or cutting your losers quickly, is that you got to stay consistent to your thesis until your thesis is wrong. Because you can get into a trade and your idea is to take the loss quickly as possible, so you want a small loss, right? But you get stopped out, and then it can end up going in the direction that you wanted to go in, and you had to eat that stop loss and you missed the profit. That's just a brief overview of why my theory is the way that it is with this thesis. Okay, so enough of that. Let's go ahead and get into testing this out. I'm going to bring up replay mode. I'm doing this on a 2-minute chart. I personally trade on a tick chart. That's just a kind of a tip to look at a tick chart, and then you could even remove the wicks. But a tick chart typically cleans the charts up a little bit. So this is kind of hard to look for ranges and all that good stuff with these minute candlesticks. But anyway, let's go with it. All right, so I have this set up so we don't have to wait forever for this to work out. I got this set up using real time, and so let me explain this first to what I want to do. So let's say I'm looking at this as a range, and I'm trying to take a long on the breakout. I'm trying to take a breakout long up here. Actually, let me make it up here. I'm gonna make it at the wick. I'm gonna use the wick on this one, right? So what I would do is one way I could do this is I could, you know, take that price, let's say 1186 and a half, and I could type this over here, right? And then make sure that I have a buy stop what was it, 1186, right? That's one method, right? Or what I can do is just click up here and then place a buy stop, and then go over here and copy that, and then I can paste it right there, right? So that's probably the way that I would do it. So let's see, I'm gonna go ahead and let this play out, and then I'll fast forward the video. There's the fill to stop me out. So what I want to do is I want to make sure I hit that buy stop again until my thesis is proven wrong. You can see I'm out $10. I lost $10. So my thesis, all right, there we go. Here's the break. I'm not stopped out yet. Let's see if I get a pullback and it stops me out. And then there's my target. So you see I lost $10 on the first one, and then I made the 30 back for a $20 profit overall. So now my thesis is wrong because I hit my profit, right? So your thesis is either going to be wrong if you hit your profit, or it's going to be wrong if it runs through your stop loss and it keeps going, okay? So until one of those two things happen, you want to stay consistent to your thesis. I'm gonna go and do one more example. All right, so for this one, I think this is the one I talked about before, where we had this sort of a flat pattern. You know, still got a lot of volatility. So if I can, okay, well. So I do the same thing and see if I can hurry up. I'm glad it's in real time. And do a buy stop again. Go over here and grab this price. Paste it over here. All right, so I'm set up and I'm ready to go. All right, so we're getting close to our trigger, and there we go. We got our trigger. We end the trade, and let's see if we hit our profit target, or do we get stopped out. If we get stopped out, it's okay. We're gonna stay consistent until our thesis is proven wrong. Stay consistent until the thesis is proven wrong. Oh, so close. So close. And this is when it's gonna start playing with your emotions, and depending on how you have it set up, right? But you wanna, you wanna manage your emotions, and you wanna stay consistent to it. Understanding, right, that eventually this is supposed to work out because you did all your work, you did all your research, and you did all the back testing that you're supposed to do. So you know that eventually, if everything came out good with that, it's gonna work out. So see, I got stopped out again. Now I'm flat on the day. All right, my thesis is proven wrong if we go below and we break below and we start actually trading bearish from here, and we get all those bearish signals. So I'm back in it again, probably gonna get stopped out again. So you can see that wholesale is just cleaning up here. All right, and we're gonna stay consistent to it, keep on hitting it. And this is why I say your reward to risk is important, because in order for this to work, you're gonna have periods like this, depending on how you have it set up. You're gonna have periods to where it's gonna be extremely, you're gonna get stopped out a lot. I mean, that's with a cutting your losses quickly strategy, you're going to get stopped out a lot. That's just the case of that's what you're doing. All right, so let's stay consistent to it. My thesis is not proven wrong yet. Now I'm going to talk about some rules, how to make this a little bit better for you towards the end of this video. But I'm going to go through this test first, and it's important to stay consistent and be patient with your testing and your research so that you have the data that you need that's going to help you manage your emotions and that's going to help you manage your emotions in the moment, and so that you're not messing your own strategy up when your strategy is fine. It's just you that's getting in the way of it, right? So you want to do all the work here. If this has to take me all day to get good data points, then I'll do it all day, right? Because I know in the end, if it comes out good, then it's gonna pay for itself, right? That it's gonna pay for the time that it took me to get the data points and figure out if this is the actual legit strategy or not. And then even if it comes out that this is not a strategy that I want to keep, that in and of itself, what works and what doesn't work now, and so that you can move and you can progress from there. Now you have that in your toolbox. All right, so we triggered one more time, and let's see if we can actually get a full break this time so I can hit profit, because our thesis is still in play. Our thesis is still active. And then there we go. We finally hit profit, and we walked away with $10 on the day. All right, so that was just a brief little example of how you would go about working this out and coming up with the strategy that you want to use. Now I want to spend this last section talking about how you can actually improve on this and make that a little bit better. So you can see right there, I took a few losses. I was up $20, and then I gave all of that back, and then I ended up being $10. That's still green is green. And sometimes whatever you're trading can be really choppy. So it helps to understand what it is that you're trading, right? So one thing that you may want to look into, like I mentioned before, you may want to look into trading with tick charts. Tick charts, a lot of times they kind of clean up the charts, and you get a little cleaner look at how the charts are being printed, right? Maybe you can remove the wicks that may help you out a little bit, right? You can use Renko charts, and then the numbers that you use, it's going to vary, based on the platform that you're using, right? So let's say right here for me, the tick charts that I use the number of trades by bar in ticks. I use the standard in ticks, right? And then, so numbers that I like, is 512. That's one. You also have 1024. So let's just look at 512 real quick. And you can play with these numbers. I've went through a lot of different numbers, and I've to see what they do. And these are just the numbers that I like for NQ. So it's going to be different based off of what you're trading. Okay, I picked the wrong one. Let me go number of bars, number of trades per bar. There we go. That was range bars. Sorry about that. Okay, so now you see I got a different look. Okay, there we go. So looking at this, you can see my entries were kind of late. If you look at the full picture, and then I could actually have played a little bit more in here and not even had to wait for that, and possibly got some better trades, right? So that's just one perspective. I don't want to take up a whole bunch of your time and just keep going this. You can do this all day, and I highly recommend to spend a lot of time on it. Another tip that you could do is you can set rules within your strategy to where maybe you only try this out 3 times. You stay consistent to it 3 times. If you get stopped out 3 times, then you just let that area go, right? You can see that last trade that I took, I think I got stopped out 2 or 3 times, right? No, 3 or 4 times. And then it finally ended up working. So, you definitely want to do all of your research and all of your back testing and all of your homework to make sure that you get enough data to where you can refine and fine tune your strategy as much as you can. Another tip that I would give is maybe you don't use a breakout method. I stopped using the breakout method, a long time ago. And it actually took me years to figure out how to not use a breakout method, because so if I wanted to go long on a trade, I wanted to get in closer to support. So it took me a long time to figure out how to actually do that efficiently. And this is kind of insight into how I was able to do that. I kept going through little, different phases and through different cycles of research and back testing, and then trying this out and trying that out. And eventually I got to I developed my strategy to a point to where I can get in at inventory and supply, to use the more accurate terms, right? So those are just a couple of tips on how you can make this better and how you can, if you interested in using this type of technique. I don't use this type of technique. I kind of like to have wider stops, but to each his own. There's a lot of people who do very well having really tight stop losses and cutting their losses super quickly. But the biggest problem that I haven't heard anyone talk about it in this way, to where they stay consistent to a certain thesis until that thesis either is right or it's wrong. Okay, so if you have any more questions, go ahead and leave that in the comment section below. You can hit me up on Discord also. Discord is the best place to get in contact with me. I don't really check emails and stuff that much. I'm so busy throughout the day that I don't really have time to do a lot of emails. I got a big backlog of emails. So hit me up on the Discord if or you can leave a comment in the comment section below. And if you found this helpful, of course, hit the like button and all that stuff. That way I know that I'm making content that you want to see, and I can keep putting out stuff like this. All right, so with all that being said, I hope you have a good rest of the day. Trade it easy.